Due to the lack of regulations mentioned earlier, developers and startup companies can run ICOs in pretty much any way that they choose. And this has led to a variety of different approaches on how campaigns are run, and does make it very difficult to cover all these situations. Some common types of pricing have begun to rise above the rest, which I will review now. Firstly, an increasing price. The ICO is set up to run in stages, and the exchange rate for tokens is increased over time. Early investors who took the biggest risk get the best price per coin ratio. There may be a decreasing price. The Gnosis team introduced the Dutch auction method, where the sale starts at the highest price per token and is lowered until there are enough bids to sell all tokens. All the tokens are then sold at that price. In a fixed price scenario, all tokens are sold at the same fixed price. Investors find this an appealing method because large investments will not generally influence the price. After the offering ends, it is not unusual for there to be a period where the investors are not allowed to transfer their coins. After this cooling off period, exchanges can list the token and have other people trade it at market price. And lastly, a situation where the price is not determined. This happens when the development team or startup company decide not to sell at a fixed price. Instead, they collect whatever amount investors choose and then distribute new tokens in proportion to the amount given by each investor.